Now let's take a look at sterling yen. We would want to use the sterling strengths to buy into the sterling yen if we get a trigger. We were all looking at this chart and we expect a deeper head all the way to 156. So the problem with this is that we're looking of course at some kind of a longer, bigger correction, an A, B and a C. You have an A, you could go into B 157.77 before you go to a C 157 and then move on higher. Now a weak employment number of course should not be good for sterling yen, but because sterling yen is a funding vehicle, used to be a funding vehicle for equity markets, but it looks like it actually may be good for sterling yen. We're seeing of course now a head and a shoulders, inverted head and shoulders, moving to that neckline, and the market appears to be trying to do a breakout into a degree 3. If this becomes positive momentum today, we make an entry. Current market is 156.93, very high, but there is a reason for this. So if this really makes positive momentum, you are seeing some kind of a wave 1. There's been a very small contracted wave 2, and the market will be doing a wave 3. This is just an A, B and a C. That's all there is to it, because we are looking at this B level. That's what you're interested in, and this is your A level. So internally you're seeing subdivisions in A and B and C into B. You're going to that second head at that point before we do a correction. We're not bothered with the rest of the structure. We're only bothered with a trigger. So suppose today we get a trigger, I think it would be ripe for the market to go long. You can consider that we have had an inverted head and shoulders and the market is moving higher. So a trigger would mean that we're getting degree 3 momentum here. We break above overbought again. And let's check the 1 hour. We're having consistent momentum floating above zero line, and therefore if we buy a break above, suppose we're going to be buying on 157.10, 157.20 even, we just have a stop at 156.5. we have a stop below this level. You're seeing of course heads and shoulders, and we will not only go to 157.7 now, we want to make the best use out of that position. Best use out of that position would mean that we take projections of the last cycle swing, 127.2. So this starts here at that point. Actually, this complete 5-wave structure, it only corrected to 50%. We want to know the proportions, very important. So let's take a look now. So just looking at this cycle is a 1, 2 and a 3, 4 and a 5. This is a cycle just corrected only to 50%. Didn't just touch 38.2, but the candle closes at 50%. We just take profits at 127.2, 158.3, 158.2. So this is going to do, we think, a higher head. If we correlate this with United States, with sterling against United States dollar, you find this is moving up very closely, very high, or trying to break out higher. So it's impacting the sterling against the yen higher on dollar weakness. We're now on sterling strength against the dollar because the dollar is weak. So if we get a degree 3 on the 15-minute chart today, we buy again. We're looking at very strong consistent momentum on the 4 hours. We know this is trending. We have been following it throughout the week, so we understand what we're standing on. Okay, so what we're looking at now, if we get this to break above over both, okay, you're looking at this very small structure, very important takeoff. This is a 1, 2 and a 3. You can take it all the way down to 1 minute if you like. You'll see the same thing. You see this is the breakout point. Therefore the market is a buy right away once you get positive momentum, and the stop is 156.5. we just checked that. The target is 158.3. the entry is going to be at around 157, 157.2 probably. So it's 100 points and less than 70 points on the stop. On the 1 minute, of course, you're looking at this structure breaking out higher. That's 1, 2, maybe this becomes a 3 technically. Your stop can be 156.7, 156.6, We will not do that, of course, because it would mean we get stopped out. In reality, our stop would need to be here below the support, 156.5. Not much farther away because we're looking at 156.6, 156.5. We are at 157. So breakout higher would mean we have a stop below the shoulders. Most immediate target is 158.3. There's also possible to see 158.6. We would relate this to our pivot levels. 158.98 is the 50% between the fluctuation high for January and the lower noise band. We're buying actually the lower noise band. And 158.13 is the breakout high for the week, so we should be testing this. If we really take it out, then of course we're going to 158.98 or 159. So we monitor and we would take that trade if we get a confirmation.